TCF 2022 in London. I'm Hannah Wallace, and kindly joining me in the studio now to discuss digital assets is Jeremy Booth from Temenos. Jeremy, thank you very much for taking the time to speak with us today.
Hi Hannah, welcome, it's a pleasure.
Really good to have you on, and we're talking about digital assets, a really important topic at this year's event. So I want to first start by talking about why that is, and why should banks be focusing on this topic? Let's start there.
Yeah, absolutely. So it is a hot topic. Blockchain has been absolutely exploding over these last couple of years. The technology is opening up brand new ways for us to manage and to store and to exchange value that's led to the creation of this whole new spectrum of new digital currencies, digital assets. So I think this is something which banks absolutely do need to be looking at. There are a variety of reasons for that. I mean, they can position themselves as leaders, as digital leaders, as innovators in the space by rolling out this kind of new products and services around this. They can tap into new customers. So this is something which is relevant right across the spectrum. So wealth managers who are servicing high net worth individuals, they're looking to allocate a portion of their portfolio to sort of crypto assets for diversification and because of the risk profile. But also right down at the other end, retail customers, retail banks, because of the granularity and the accessibility, it's also relevant there too. And then banks, I think, can also stay relevant with a younger generation. I think the younger generation is adopting digital assets more quickly. They're more keen to embrace digital assets as new stores of value, so banks can really reinforce their presence with that important demographic group, which is really key. And then things like adding new products and services opens up new revenue streams, obviously, for the bank as well, which is really interesting. And with crypto custody, crypto trading, the fees associated tend to be much higher than for traditional assets. So that's something of interest as well. So lots of reasons for banks to be looking at this.
Right, a positive start. Thank you very much for setting the scene for us then. So let's go into a bit more detail. Run us through some of the really big trends around digital assets and also how this is having an impact and disrupting traditional finance.
The immediate use case right now we're seeing is, as I've said, around custody and trading crypto assets, allowing the bank's customers to gain access to this asset class as a new investment. Beyond that, there's a range of new trends and areas we're seeing potentially disrupting. So I think payments, digital payments is one, connecting to new payment rails, alternative payment rails. I think the adoption of stable coins, once these become truly stable and regulated and collateralized, opens up a whole range of possibilities in terms of optimizing settlements and facilitating transactions. And of course, central banks, pretty much every central bank is looking now at their form of digital money. Some are starting to roll out CBDCs. So banks will need to connect to these networks. They'll need to provide wallet facilities for their customers to transact and to hold these kind of assets. Then we've got things like DeFi, decentralized finance, which is this kind of umbrella term for new ways of managing traditional financial services, but in a sort of an automated way on the blockchain using smart contracts. Now, this can be for things like new borrowing and lending models, for example. Now, in the public markets, this is a bit of the Wild West today, but we're starting to see the first institutionalized DeFi protocols really targeted at banks with sort of a KYC'd gatekeeper as an access to those protocols. So that's coming, I think, which is coming as well. And then the broader tokenization topic, for sure, NFTs have grabbed the headlines. But beyond that, we're seeing things like securities tokenization, which is opening up new possibilities, again, for improving settlement processing for securities and facilitating those kind of transactions, and opening up new possibilities for non-listed companies to gain access to investors and to raise capital. And as we get legal clarity, things like tokenization of real-world assets, collectibles, real estate can also become possible. And then people will need somewhere to hold their tokens of value, which is where banks can come in as well. Sure. So there's lots and lots of possibilities, I think, coming down the line. Yeah,
that's what I'm hearing loud and clear, the possibilities and the opportunities that can be had. So that's where Temenos comes in. What are you doing to help those market players really make the most and benefit from those opportunities you've just highlighted?
It's a really hot topic, so we've been building our expertise also within Temenos to support our banking customers with this. And we've been doing a few things. So first of all, making sure that our products are ready. So looking at things like how do we model, how do we manage crypto assets within our products, making sure the products are fit for purpose. So for example, one of the challenges faced by the entire banking industry is around the extremely fine-grained record keeping that's required for some of these assets. For example, Ethereum requires 18 decimal place precision. So making sure that our products are ready and can handle this kind of requirement. On the other hand, working with infrastructure providers through our Temenos exchange and our innovation hub to build out integrations, and so we've got an end-to-end offering for banks to provide this kind of service, and working through that, looking at impacts and considerations. So we've got a template and guidelines and best practices to help banks looking to roll out this kind of product and offering. So it's a really exciting time, lots going on, and we're really excited to be supporting our customers through this.
That's right, it sounds like you're busy at work at Temenos, and really looking forward to watching the space and seeing what you have for us further down the line. But Jeremy, we'll leave it there, let you get back to the event, but thank you very much.
Thank you.